Good evening, everyone. Marty Mazzora, December 6, 2018. I'm going to keep this one very quick tonight. I promised in my blog post earlier this morning that while I couldn't blog again during the day, that I'd come back and touch base this evening. So that's what I'm doing now, and it's just real easy and quick for me to do it through the video. In that blog post, I showed you this snip of the live Dow chart. And I reminded you that I've been calling for a test and a potential breach of this support level. I was calling for it here. We didn't quite get it. We were calling for it again here. And when I posted this morning, this is where we were. That orange line tells you right where the market was. And it looked like we were going to see a test of this. Well, remember last night I said that if I were a short-term trader, I'd come in to the market short. Sure enough, the Dow was down 300, 400 points at one point, but if you'd gone short there, you would have done really well for a while because the Dow went down 780 points. I also said be very careful, and you better be willing to quickly reverse that position because there's enough cash out there, and I really think ultimately this market wants to move higher, so you could easily get whipsawed. And sure enough, that's exactly what happened. This is where the market closed, right at the high of the trading session, still below the previous day's close. We had that initial morning gap. So traders might have done well, but boy, they had to be nimble today. I also said that if you're a long-term investor, these kinds of markets are an opportunity to either put some cash to work, if you've got some extra cash to put to work, or simply just to hang on and stick with your allocation, even if it's relatively growthy, because our analysis of macro conditions still tells us that we don't have great recession risk in the near term. Leon Cooperman, very respected money manager in the world, has been around for decades. He said today that he thinks the market's going to end the year higher because we really don't have any serious recession risk in the near term. That echoes how I feel right now, at least the part of no real recession risk in the near term. Whether or not the market ends higher this year remains to be seen, because right now the market is really trading on emotion, headline risk, and so on. And it is so volatile in that regard. I'm not, in this case, I don't mean market volatility, I mean headline volatility. It's really something to behold. And the big issue right now is not the Fed, not at all. The big issue is the trade situation with China that really has to be remedied, or we need to get in the direction of a legitimate remedy, or I'm going to be telling a different story about macro conditions. Right now they're fine. Right now this is still volatility within the context of an ongoing bull market that's likely to stay alive for a while. But that's not because I want it to be that way. That's because that's what the data tells me. When it tells me something different, I'm going to tell you a different story, and we're going to be doing something different within client portfolios. Thank you, folks, as always, for watching and listening, and I'll talk to you again very soon. Good night.